From out of the blue, you'll only see the blue sky. I'm just a shadow of white Morpheus. How are you guys doing? So yesterday, about 17 hours ago, Odd tells me, I tweeted this particular chart and I highlighted it, and I was concerned, and I said a couple of things are happening. The yield is going up on the treasury, but Bitcoin is not going up with it, and until now it's been correlated. What is happening? Is there a lag and BT will catch up? The correlation has broken down. There's no new money. Crypto is heavy, basically. Is there a hack coming? Other events like a bear market, as this person was highlighting. I was kind of saying it in a different way. This chart again, let's have a look at it. On the top half was your 10-year treasury yield. That's what gets paid on debt. As people get more inflation orientated, Bitcoin is getting a bid because the devaluation of currency supports limited number Bitcoin. So when you moved up and topped out, you've typically topped out on Bitcoin on the rates. Once you start moving down, you move down, then you bottom out. You're typically bottoming out on the rates and you start moving up. So Bitcoin bottoms out and starts moving up. When you start making highs on the rates and having pullbacks, that's when Bitcoin has pullbacks. Now Bitcoin's a higher beta, it pulls back more. What was interesting is yields were setting up to move higher during this period in the green, the top right here. So let's just grab it, little boy PP blue. And you can see it here. So since this point on yields down there, we have got up there. That's the diagonal across that period. At the same time, however, as we fell into those lows, we gapped down there on Bitcoin. Bitcoin has diverged. This is an actual divergence. This is showing crypto is heavy and not getting the money flows right now for the inflation trade. Why? Because there is fear about the Fed's journey of tightening rates. And people fear that the system, this is my assessment, I'm superimposing my speculative answer, there could be other answers, that any form, and we've just had FoMC, so I'm coming at you just post FoMC, which is the Fed's meeting, all agreed. Let's have a look exactly at the wording of what they said. Everything is biased towards moving faster to the upside. Inflation is the risk to the upside is the highest. So if we have a look at that, Fed may need to hike rates faster, reduce balance sheets quickly. Ooh, must hurry, must hurry. Wrong. Financial system can't support that. It will absolutely goddamn crash. You've got equities. Oh my God, equities. Before we even take a look at the total index, we'll take a look at the NASDAQ. Take a look at the NASDAQ. NASDAQ does not like high rates, guys. It doesn't like them at all. If you're a growth stock and not giving a yield, you don't like it at all. Neither does high yield debt, where the rates go up and what you have to pay. There are so many places the system will break if we truly went on a long-standing increase in rates. So let's just highlight that. There's the NASDAQ. Let's just give you a full view monthly. That's the NASDAQ, guys. A 20% correction would be about 3,000 off to about 12,000, about there. That's how you're gone. Since the 02 lows or the 09, 08, 09 lows. You're telling me you couldn't go a bear market with a 20% correction and lose 3 grand? In fact, you could have a mother of a bear market, which you've yet to properly have since that low at about 1,000, and this is NASDAQ. And you might be saying, crypto channel, why am I looking at the NASDAQ? Because it's a high beta asset class like crypto, which tends not to pay earnings because it's a growth stock. 1040 and you're at 15,800 from 1040. You are 15.8 times up, roughly 15.75 times up from 09. We've just turned 22. So you're talking about 13 years, 15x up. Are you kidding me? And half those people had Tesla. It's absolutely insane. So our view was defense. Our view was defense. We left messages in our community, and I was going to YouTube last night. Unfortunately, bit of jet lag, new destination. I didn't do it. I thought, well, I'll wait till what happens. We confirmed with the guys that they should be defensive into this period. Yep, so we assured that the community themselves were flat and defensive position for this as we went into the FoMC day. I want to take you into the total. By the way, if you're in the community, you would have known that. Sorry, they've got to be served first and foremost. If we are, let me just take you into total. A couple of the charts that we've done with regards to total. Now, this looks a very busy one because we're highlighting every 500 trillion with a big bold blue line, maybe a bit aggressive. But the point we are making here is that in our view, there was a real reason to believe that there could be a little bit of a rollover and spill down to the downside. One reason was the clear divergence illustrating Bitcoin's weakness relative to what was actually quite a positive up move as of yesterday on the 10-year. Note the divergence I'm illustrating here with the blue arrow and the inflation risk on divergence. Bitcoin has not responded. And the notion was either it responds late or it doesn't at all. This might pull back a little bit and Bitcoin only takes the elevator and none of the escalator to the upside. This is clear evidence of some weightiness to the higher risk asset category. And everyone goes, well, the dollar strength and the bond yield rates, none of that mattered in cypherpunk's era. Well, it's a different market now. It's an asset category. It's a high beta asset category with institutional family office engagement. They are not the same people. And markets are determined at the margin. It's what the new money is going to do. If you're a locked up hodl, you aren't the guy pushing the price up $1 or down 10. You're just locked up and hodling. And you're going to hold on for dear life. And a lot of retail is investors like that. A lot of institutionals are buyers at certain levels, and once you've gone beyond a certain rate of upside, they're sellers because they feel it's done too much. This is professional investor trading that are paid year on year for bonuses. So if we just take a look here, this was some of the crypto market caps we were looking at. So let's start with this one. This is the total. This is what we did last night. It's going out in our newsletter that people should prepare to be defensive, but the FOMC has almost second-guessed us here. This is a rising wedge. This was our key reason as to why you should position cautiously, and it's across all of the market caps. You're staying above a funnel level for now, but for a super small period. There's no candle body, just wicks below this green line level, but you've been holding, and then this was extremely low volatility squeeze on a rising wedge. At the lower end of it, the red line, the basing ascending grind line, which points to real problem on there. Don't forget, you have your 1 trillion mark down here, and you're having in and around 1.25 trillion, 1.25 here at this level, and it looks like we were due a revisit to the downside. That is why this chart looks so messy. This is total, by the way. In actual fact, that's incorrect. It's excluding BTC. It's total 2. Let's show you total 1. That's still excluding. Where's my total 2? I did a couple of versions draw of it. Maybe this is it. That's it. Total, full total. Now, so what we recently had on full total, including Bitcoin, we'll come back to total 2, by the way. Left shoulder, head, right shoulder. Remember this tricky shouldering on a broadening structure. That was your final release. Guess what? 2.5 trillion is your neckline. That's the big key level. Down, down, down you go. That target was made on that spiller thriller, that super wick. What did that wick run? It took you through and made a technical touch at break of the 2 trillion snapback rally. This is all a flag-like structure, flagging. See the basing ascending grind line in red. I put a TG pink number on either side of this. This would typically form channels, but you've got a 2.25, the midpoint between 2 trillion, which you technically ran from your spiller from 2.5 to 2, trading to the level. This is like pegs. Futures markets, it's called pegging, key round numbers. How big a market cap is this whole thing that is absorbing money? It was 2.5 trillion. It almost came to 3 up top here. It failed to make the 3. 2.5 was the neckline. 2 was the first stab down. And I'm afraid to say there's still some risk of nestled head and shoulders on here where the flag represents a right shoulder. Now you might say, well, they're not exactly horizontal. Well, you could have the 2 trillion as a neckline. And you have that as your period over. Remember, we're dividing by the dollar, and the dollar's become part of the story. I've been banging on from my last visit on Real Vision to regularly on Free Views. It's time to understand if we're having a dollar strength period, it's going to be problematic because it's the wrong kind of dollar strength. It's the strength of the Fed breaking the financial system that's going to cause a deflationary event. We're just waiting to see which of the piping is going to burst. There is no feasible long-term ability to raise interest rates for any meaningful scale. Even stopping buying and self-monetizing all this debt that they're creating is also not plausible. So this was essentially a bear flag channel after a sell-off. And we were pointing out that you were squeezed there across your 2.5 and you're basing ascending grind line. And it was our essential opinion that guys should be defensive for that potential down move. And I would argue now that a large part of that has commenced potentially, and it won't necessarily be short term, although you may get a bounce over here for a wee bit and rally, who knows. I do feel defensive has now become the game. Of course, you're hearing this now after a sell-off, and I hope you haven't been too badly washed by the market. Let's have a look at the crypto. So that was crypto market cap. This will be in our monthly newsletter, which you can subscribe to by watching the mini-series below. Hit the mini-series below. If you want to be getting these live updates in the community, you should be in the community book a call. We have corporate clients, including Managed Money, as people in our community. So this was total 2. This excludes Bitcoin. This is the Ethereum story. More of a rising wedge in a rising wedge. You see the small difference, a little bit more of a squeeze. Again, I'm just illustrating in blue the bits that were below the green line. that was this inverted sell-off that made target during the halftime period. And then again, support, support, support. This is zonally to be viewed. And now you have this rising wedge cramped up along the basing ascending grind line along there. Our assessment is down and a test, maybe support again, and then later a break for the downside. So there's a bit of pressure. This excludes Bitcoin, has Ethereum in it. So that's total 2. What is the other one that we were going to show you? That is, let's get total 3 up. So this excludes Bitcoin and Ethereum. Please note, Bitcoin and Ethereum there are excluded. So this will have the likes of Binance, Solana, etc., etc. So let's once again clear the face. This gives you an even stronger upward. So you were seeing that during this period, there was quite decent reflation for these. The minute you take the Bitcoin and Eth out, Bitcoin was a bit flat. It's quite important that Bitcoin is not too flat or dead because it's such a big part of the componentry. And this yellow zone that I've highlighted here is a real concern at around the 725 billion mark, because you could even have, if we have a real, this is not a call, don't get me wrong, I haven't just flipped and become a super bear. I said you need to be defensive for the beginning of this year. I'm just warning that there is a possibility. Doesn't mean it's a high possibility, but there is a possibility that there could be some bearish structure here. This is a slide for downside that you eventually broke out of. If the dollar is going to be super strong and Bitcoin is going to be heavy of the high beta and is going to skate into marginally lower lows. Remember, previous YouTube, we divided Bitcoin by the NASDAQ. And we warned that there's lower to go, but we felt that it would probably get some support. So it's either going to be moderately move lower before finding some support reasonably soon, or it could be something a little bit more critical if we have a serious sell-off where the alts, the major alts excluding Ethereum, bring their market cap all the way back down to 725, because then you have this kind of structure. And then you have a 725 neckline. Don't forget, this made 1.1 trillion. So 725 is already 235 down. If you were to have a hit of 235 billion on 725, you'll be sub 500. Sub 500, which could be most unpleasant. Hacks, central bank digital tokens to replace crypto, most crypto to be deemed securities, who knows. A little bit of a shock and nastiness might be possible, who knows. Bit of a funnel here. We were sitting in that box in a funnel from this setup that made target. You see when you would have taken it long here, and you made your target, and then you had a major sell-off. So that was a good little steal, and then you got that final move up. That funnel, support, 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 always broken with momentum, sets up new level, resistance, resistance, resistance. A little bit of resistance before with momentum pushing through. Support, 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 and today we'll go and see. So these were prepared for our newsletter that goes out tomorrow. And they've probably been superseded by events. This is your total market caps. All cryptos, excluding Bitcoin and Ethereum. Total 1, 2, and 3. So that was the breakdown we've subsequently had. Look, it's not bone jarring. It's not this spiller so far. It's not that. But it is a break of this grind line. You can quite easily get a little bit of a return move, but you're more likely at some point to probe for the 2 and a possible lower move. That doesn't necessarily mean, but a 1.75 move would be pretty bearish given that. Again, macro, I still think for the macro time frame we have a dodgy first quarter. I think by quarter 4 of this year things are going better for crypto, possibly quarter 3, even second half. But it might just be a bit ropey. Why the dollar strength? Why? Because it's a big asset class now and it faces institutional headwinds, and that dollar strength is fear. It's risk off, and it's the institutions and the home offices, not little retail traders, that are setting the price of crypto. Crypto is determined at the margin. So that's kind of where we were. There were a few Bitcoin charts in there that we prepared. So you're getting a sneak peek on the newsletter. I want to highlight a few things here for you, technically, that people can observe. Some guys were asking, why is Bitcoin stuck between the 45 and the 50K? This was obviously prior to today, where it's now traded sub. And I was giving the answer. The neckline of the legacy half-time oranges head and shoulder, for which you only managed a marginally higher high, after a marginally higher high again, these guys, very, very ropey and shaky structure that. was 47.5. That's bang in between 45 and 50. Plus 100% at your halftime oranges high and naught at your absolute low. And guess what? You have a 50% at 46.86, so just through the 45 level, and you have a 61.8 at the 51 level, just through the 51. It's this dark green into light blue level that you just ran into there and ran into there. And people need to understand these things as well. We've also highlighted that the 42 was an interesting level that was touched in the previous chart. So quite a bit going on in here in terms of Bitcoin and why you have been churning in this particular realm. Let's see if there were anything else here. Now, I want to show you the dollar. Why should you care about the dollar? You're a crypto trader because of everything I've already explained. That's why. Same as the 10-year yield in bonds. You become an asset class. When the cypherpunks were designing, it was totally determined by what Bitcoin did and adoption of Bitcoin, etc. It didn't matter what the dollar did. It could go up on a decreasing dollar, on an increasing dollar. It had a 50 million market cap. It had a 150 million market cap. It had a 1 billion market cap. It had a 1.5 billion market cap. It had a 30 billion market cap. By the time you become trillion, and you're relying on institutions and asset management money as part of your players, you've become an asset class. And if you are a high beta, high risk asset class, and people are in fear and running to the dollar in a inverted head and shoulder, let's clear the face there a bit. Why has Epic Pen put that radical line there? And it won't delete it either. That's real annoying. Can't remove that line now. Forgive me for that. This is the bull flag that we are wanting to see. That is what we were calling and sharing with the guys. It looked like the dollar might have had a bigger pullback, but in actual fact, it shook off a little bit there with a hammer, and we'll show you updated today. This is its right shoulder, by the way, of an inverted head and shoulder, which is a major reversal. This is it. I'm really peed about that. It's not deleting. Okay, we're back, and that's the right shoulder, and this is a move. So let's show you that in a bigger way. How does this resolve? Typically, a little bit of easing and then you break out, but you've already actually had one easing, a rally up to the other side, two easing. You're on the third up move to the capping descending grind line. You might have a small pullback, wind up, and off you go. And that's going to be dollar strength. It's going to be dollar strength, and that's a problem for that particular market. So let's have a look. So yes, had a couple of bugs there, just chipped out. I wanted to show you the rest of the dollar index that we were talking about as we look at Bitcoin as it let go of that level. Now, one of the points I was making is this is not an end of times crash. It's not even anything like the crash of the 1st of December here, down here. This is a continuation of that sell-off. That doesn't mean it has to be an absolute end of times crash. So as I state, this is not super macro bear flippening. It's short-term defensive positioning. It could stop down here at the 2 million and rally. It could even stop before. It doesn't mean it's the end of the world. I don't want to be miscaricatured. However, I do want to highlight what's been going on the dollar index. And the draw I wanted to show you, here we go. There's that bull flag, which we were talking about on the Snagit that was in our newsletter that was taken yesterday. This is it today. After that sell-off, you can see the dollar reasonably firm. The expectation is that they will be moving forward, and they may move a little quicker, so they say. So they say. They're not to be trusted, but at the moment, as long as they're talking that game, it's putting pressure on things. The minute they start dropping catches and missing that game talk, and people start calling BS on their posturing in a deeply, deeply discredited organization, totally criminal organization and deeply discredited. But the minute that starts happening, you're certainly going to have a more interesting crypto environment. And when they break the economy because they are raising it and their stinky stoink market collapses, one of the best things that could happen for Bitcoin is there's a major equity collapse. But of course that will be first very bad for Bitcoin crypto, and then later very good when they come with their printomatics and they roll back all their big talk. Oh, the economy is not as strong as we thought to sustain long-winded. Who could have seen a bank hack as coming? Who could have seen X, Y, Z, some deflationary new narrative? This inverted head and shoulder with the left shoulder here, the complex head. If you want to learn more about how we do this, by the way, link below, book a chat. Only if you're serious, only if you have no fantasies about wealth building and you are ready to learn and grow on a sustained basis, build wealth and protect wealth in reset seasons. So bull flag, we have got a target up the top here at 99. This is at 96. That's a big move still to go. Ever since we got up here and we had this cupping for the right shoulder and you were as low as 93, we said this is inverted head and shoulder territory. Dollar strength will prevail, which is why the euro is coming under pressure and the euro Swiss franc is a breakdown. Although yesterday, there's been temporary respite. It is not the key trend. Overall for us, this is a bottom out. It was so critical that this didn't run this blue line. What was the blue line, you ask? It was the previous low of what is most likely an upside continuation pattern. We've shown this countless times on our Market Sniper channel. You should be subscribed to both if you want to understand the big bad world of currencies. But this should be assumed on balance of probabilities by us that if you were to face 99, this would be a continuation pattern. Don't forget, a little bit of a flag here now. Let's say pull back and then go, and you end up over there somewhere. Then you have a rest and you have a pullback. During that period, Bitcoin will probably get some element of respite from the headwind of a dollar before eventually we go higher if we are correct about the bigger time frame of this. I've also shown you our macro on this chart before. If we take the eye off there, let's have a look if that's going to show. No, not on this particular dollar index. Let's get the other. Get out of there. Man, oh man. That's the one. That's the one we're showing you on the grand macro scheme of things, our view for the dollar. Huge falling wedge spanning my entire trading career. In fact, end of school days for me, right the way to where we are today. Continuation pattern. Small higher to the 99s, pull back, rest, and go there for the 112 guesstimated target. We'll have more of an inclination later when this is finished. It could be less, it could be 110. Doesn't matter, that is a substantial move. All currently in a channel like this, testing each side, up, down, testing each side, up, down. This is going to grind the euro down. The euro will have a flash crash of some scale against the franc and will be giving up ground against the dollar. This is a headwind for Bitcoin because the God market of fiat is growing. That will be a headwind. But what is a headwind today, when it finally dissipates and no longer hold, is a massive lifting of a weight off that could see incredible strength. This was why the first cup gold nugget on Bitcoin was such an important period to trade and to trade leverage and to make real money, because most of the time you should not be on leverage for that. By the way, if you don't see the dollar getting stronger, let me warn you, we have upside structures for the USD Korean won. We have upside structures for USD JPY. We've been saying the JPY is going to go through 36 when 136 when it was 109. It's now 116 and it's going for 136. We've been warning for a very long time about this to 2,100. This is also on a monthly chart. These are super macro. We're talking about the Hong Kong dollar peg failure. The only thing we see being stronger of a fiat is the Swiss franc over the dollar. So this is where you are at, and these things are real. And having traders that have traded the traditional markets, not just the crypto markets, is imperative. Guys with their stock to flow models are sitting there wondering, you know, they're blocking guys that are talking about other tokens apart from Bitcoin and who understand the financial markets such as FX and bond market yields, and they are all deep diving in their Bitcoin with their modeling for Bitcoin. Bitcoin is one half of the equation. What are you measuring it against? As long as you're measuring it against the dollar, there's another component to it. This marginally higher high is not supportive to initially great price behavior performance. This points to a pullback. We also showed you the annual chart some time ago, also on this channel. We want to try Bitstamp for that to have a bit of history. That is all you've got as data. But we warned you that the pushback here, it's not a bear market. You can pull back, you could pull back all the way. You could even pull back to the top of the 2017 highs if you wanted and still be in a macro bull market. That's not a prediction. I'm just highlighting the movements get less large as you go further up. This showed huge percentage gains and dips. 2017 run into the December high, huge percentage gains. First cup gold nugget break was a great candle for you to be leveraged long, and you carried some of that into this candle. Now you have a selling wick. It's not quite a shooting star, but it's a substantial selling wick, and you've still got some of that pushback momentum in here. This can come all the way through to the downside. It can partially engulf. This is why you've got to be defense. Bitcoin dominance is at a key level as well. It's worth highlighting. And it's been run. Let's take the eye off so that you can see. It's been run and bled out. Typically when you have a key level that's being run, you usually get a reaction from Bitcoin. What means is they all go down, Bitcoin slightly less, and you get a bit of a reflation of dominance. No new tokens being listed. Everyone in fear. Oh, postpone, postpone, postpone. That is what is happening. Okay, guys, Ethereum. Let's do a quick pass by Ethereum. That is not a good candle. That is not a good candle. That is real. Every time you grind, we've called a number of times, grind line, and you've crashed. Rising wedge, grind line, crash. Grind line with a bit of a broadening structure, crash. New low. You are threatening this wick low here. It's not great. It's not a great time. So, do you rush and sell right now if you rode it? No, you should have been in the community and been defensive before. It's a terrible time to sell, but it's also could get worse. It could get worse. If you hodl, you could hodl for 6 months, and it could take quite a while before you get back up. If you stake and hold, if you've got something that is stake worthy, you know, you might survive. But what if you wait a year and a half? And you still don't get back to your current levels? We don't know how long this will last. The sustained strength of the dollar could be unpleasant. Hence why blue pot has been cleared out. And we were doing that in the last 4 or 5 days into relative safety. And it's not a great set of circumstances right now. But is it cataclysmic? I'm not sure it's cataclysmic. We've had these sell-offs before. You don't have to, you know, commit suicide. Not just yet. So there we go. Again, sell-off. This was our halftime oranges sell-off. It's massive. This is more of a bleed out than an absolute death spiral. But it is consistent. If it accelerated as the Fed released new news and dollar resurges out of that bull flag, it's going to be unpleasant for you, and you could find yourself sub 3K if you're an Ethereum fan. Sol, we were talking about Sol as being a little bit flat bottom. We'll give you one of our community shorts. on one of the charts that we think will be a big faller at the end here, from one of our community leaders that are involved with the webinars, and he did a great job, and he spotted a particularly nicely set up small altcoin that we think could fall quite far, and I'll give you that in a second. So let's just show you Solana, and then we'll move on to that. Solana. So quite a quick spill. Let's just clear the face a little bit, and we had a little bit of inverted structure in there on the smaller time frames. You can see it, bang. Every time I put this up there you go. This was done, and it's been an absolute spill. 168, 154. It's pretty harsh selling, and there was a lot of this structure that we are pointing, and we're fans of Sol. How many times have you seen us say something positive about it? Plenty. We were looking at the Sol crosses, and we think, man, they're all going to potentially go down though, and Sol could even relatively against Bitcoin, Ethereum, still come down and still long run be an overperformer. So it doesn't have to be the end of the world, but this is ugly. If you could have sold at 168, I think you would have taken it, because you can have it all back at 155 right now, and who's to say it's all over. So let's give you a final one. As I say, a little gift from the community, the work that they've done. Some of our members may already be short. I am already short, so you know that. But by my reckoning, it is yet to break, so you have some luck on your side. So if you're concerned, or you're holding a few tokens and you might want something to hedge, by the way, this is not for most people trading in a short market. Whoops, it started to run, it seems. You guys are going to be late. It could be triggering. This is the kind of thing that you miss from our quality presenters in our community. It's Maker, M-A-K-E-R. This is it, and I will show you a bigger time frame view as well. This is very bearish structure, a bit like the Sol structure, only even bigger in pattern type. It's been doing this for quite a while. It went right up to over 6K, 6.3. It smashed to 1800 in that little schizo wick, and then it's been doing this. This is what we call an inverted HVF structure of great quality. Let's show it to you on a bigger time frame. Are you going to meet your maker? That was a great upside, by the way, with supreme overperformance right there. Yep, and this is what you're left with after the blow off. Note, here's your push up, and then you went into broadening structure like that. You had a little bit of an inverted there, you smack down, and then you are slap in the face. Flat bottom girls make the rocking world go around. Something like that anyway. And this is a seller. So we are short, and others may be short already. And so that you're aware, we have an interest in this because we are short. And this, for me, feels like this particular token can go down, and in this environment could be helped down immensely more. So defense. Okay, guys, let me call time there. And remember, if you're not a fantasist and you're ready to take ownership of whatever conditions the market is bringing you, and you seek to build wealth in those conditions, and you're not just a blind hodl, but you generally know that broadly we're investing, and we are very selective about trading periods, and you own your own outcomes, we could be of value and interest to you. Not only are we interested in building wealth in reset times, we're also in interest in protecting it. And I am in a location where we are revisiting our interests with regards to that, and meeting some of our community members therein as well. Okay, thank you for watching, and we'll catch up with you all soon. We'll see you on the other side. Hope you enjoyed the clip. You've been given a short, you've been warned why the other things are in a bit of a corrective phase. You missed out on a jet lag release last night. You're getting the news a little bit after the news. Sorry for that. You know what to do about it if you don't want to miss something, though. I'm paid to work for some people. The rest is for free and depends on how much time I have. Okay, bye for now, and thank you very much for watching.